Adobe is one of those companies most people know even if they don't think about it much. Photoshop, Premiere Pro, Illustrator, stuff people have been using for years. But lately, the story around Adobe isn't just about creative software. It's about how it's handling the whole AI shift. Some people think Adobe is in a great position. Others think AI could actually be a big problem for them. I've been reading a bunch of recent articles and analyst notes about Adobe, and I'm going to go through what's been said, both the good and the bad, and then we'll see where that leaves the stock right now. Some of the recent takes are pretty optimistic. They've pointed out that Adobe's AI tool Firefly is getting more attention and helping bring in new subscribers. What's interesting about Firefly is it's built into the apps people already use, and it's set up so the images it makes are safe to use commercially. That means businesses don't have to worry about copyright issues, which is actually a big deal. The articles also point out that Adobe's margins are still strong, the business is steady, and the valuation has come down after the stock's drop. The argument here is that Adobe is a solid company going through a dip, and that AI could be the thing that drives the next round of growth. There are some big-name investors who are also positive on Adobe. At the Sohn conference, William Hurd from Hurd Capital talked about why he likes the stock. He highlighted that Adobe's gross margins are about 90%, which is very high for a software company. The stock right now trades at under 20 times forward earnings, and in his view, that's too cheap for a business like this. He thinks if the market re-rates Adobe back to something like 34 times earnings, the stock could go to around $700. He also pointed out that Firefly's commercial approach is a real competitive edge, and apparently there's been some insider buying as well, which adds confidence for him. Of course, there's the other side of it. Melius Research recently downgraded Adobe to a sell and gave it a price target of $310. Their view is that AI could actually eat away at Adobe's business instead of helping it. There are companies like Canva, Figma, and Runway that are AI first, built from the ground up without old software structures. They can move faster and release features more quickly. And then you've got big players like Microsoft also building creative AI tools. The concern is that as AI makes design tools easier and cheaper, Adobe's premium pricing might not hold up. On top of that, while Adobe talks a lot about AI, investors still want to see proof that it's bringing in real revenue. Even after Adobe beat earnings recently, the stock fell about 5% because people felt like the AI impact wasn't showing up in the numbers yet. Looking at the bigger picture, Adobe's been a strong performer over time. If you'd put $1,000 into the stock 20 years ago, it would be worth almost $17,000 today. That's way ahead of the broader market. The company's been through tech bubbles, recessions, big industry changes, and it's still one of the leaders in creative software. Right now, the stock is around $333 to $338, which is about 40% below its peak of roughly $588. Analysts are split on where it's going next. Some think it could drop a bit more, others see it heading back toward the $500, $600 range. The average analyst target is around $490. Here's how I see it based on everything I've read. On the positive side, Adobe has a massive customer base, very high margins, and products that are deeply embedded in creative work. If Firefly and the other AI features really take off, that could help them grow again and maybe even bring the stock back to old highs. On the negative side, AI is making it easier for smaller and cheaper tools to compete, and Adobe has to prove that people will keep subscription prices when cheaper or free AI tools exist. Also, until we see AI-related revenue showing up clearly in the earnings reports, there's always going to be some doubt. Right now, the stock's cheaper than it's been in a while, and for long-term investors who believe in the brand and the ecosystem, that might be enough. For others, it might make sense to wait and see how the AI side actually performs before jumping in. I'll make a small bet on Adobe, but for sure won't be one of my core positions. Thanks for watching. See you in the next one.